All right, David, what's the impact of these tariff movements on the markets? We've got Reading today. Is this because of tariffs?
Well, it's not down enough to say that it's from tariffs, and it's down today less than it was up on Friday. So I don't think so, Stuart. Look, he doesn't actually have the legal authority in Section 122 to do it. That's on balance of payments, and there isn't a balance of payments crisis. So I think that's going to end up going to court as well. But that's the rationale he's using. This is going to add to uncertainty. There's already the refund issue we're going to talk about, but nobody knows what to do here. They should never have used IEPA. It was questionable from the get-go, and there's going to be a lot of uncertainty for businesses now for the next several months.
Endless litigation.
Endless litigation, and the litigation is likely to end in the favor of the companies that have paid these tariffs. I think President Trump should take the win that they've accidentally given him, because $120 billion can come back into the economy of the private sector if these businesses get refunds. And that money is needed right now for hiring, for job growth. So this is a mess. But no, they do not have you. If you want these tariffs, you got to go to Congress. That's what the Constitution says.
And that's what the Supreme Court said, basically.
That's right.
All right. Thank you, David.
Investors are rotating away from these high-risk assets. Lately, it seems like cryptos have been trading like the NASDAQ, like technology stocks, and not that safe haven digital gold, if you will. So these are considered risky.
You see the expression on
I know.
I think David believes that Bitcoin or other cryptos will eventually sink to nothing. Do you believe that?
No, I don't believe it'll go to nothing. I don't think anyone has any idea what it'll go to, because it's completely, totally speculative. But I don't believe that lately Bitcoin's been acting like a NASDAQ. I think it's done that for years and years. And when the NASDAQ's rallying higher, it goes higher. It's leveraged. It's speculative. Digital gold, it was down 30% when gold hit over 5,000 an ounce. What Bitcoin is a speculative mess that people believed was something different than it is, period.
But gold, now that is a safe haven. It seems to be acting like a safe haven, because you're almost at 5,200 and gold pays no dividends. So
uncertain times.
You touch it with a 10-foot pole, would you?
Well, gold is, it doesn't yield, but that is also something that's very speculative right now. You have a lot of traders going into gold, so you've seen a lot of volatility.
Do you like gold or Bitcoin better?
Well, obviously, I like gold more than Bitcoin. Gold is something I can touch. And there's a lot less grifters in the gold world than the Bitcoin crypto world.
Whoa.
I tend to avoid the grifters.
Strong word there.
I'm getting warmed up. It's very cold outside.
Yes, sir. You've got some time left. Individual stocks. Yeah. We've got bad news for Novo Nordisk. You have any interest in commenting on weight loss drug, David?
I have an interest in commenting on the fact that Novo is not down 15%. It is down 70%, because it was at 140 a year and a half ago, and their sales were up 100% last year. So for all this talk about people saying the big guys are trying to manipulate stocks or other things, do you know why really good companies go down sometimes? Because they're too darn expensive. They're overpriced. The valuation's too high. Novo does have this testing issue and competitive features with Lilly, but it also was way overpriced, and that's what the market is dealing with.
You said you were just warming up, but clearly you are warming up to a crescendo at the end.
That's why you have me on. You don't want the boring, David.
No, I don't. Is there such a thing? No, there isn't. I'll move on to Domino's Pizza. I know they're up this morning, significantly so. Why?
They increased their dividend by 15%. The stock is gaining about 5%. They grew their same-store sales here in North America and internationally more than expected. Bad news, profit missed. Why? Higher labor and higher insurance.
They increased their dividend.
I like that.
Music to your ears, isn't it?
It is. It isn't a stock we own,
Finally.
but good for them increasing the dividend and doing so because business is improving. So we love seeing that.
Are you in Domino's?
No, we don't have very many consumer type, discretionary companies because their dividends can be more vulnerable, Stuart.
But you did bring a couple of stock picks with you.
I sure did.
And the first is Vail Resorts. Now, that's kind of ironic because there ain't much snow in Vail this year, is it?
Well, I don't know if you go outside right now. It might feel like we're at a Vail Resort here in New York City.
Right.
That's the issue, is that there's been less snow. And so people said that's weighing on companies like Vail. We think that gets priced in. And the fact that Vail's earnings are not down in a tough earnings season because they changed the revenue model with a pass. So people are still paying, even if they're not able to use the mountains more. Vail did a great job, and we bought in a lot of weakness. We think it's got a good runway to go.
Vici Properties, VICI, I don't know them.
No, again, I wanted to highlight some of these real estate plays because here you have a 6% dividend yield. They're just a landlord. They own Chelsea Piers here in New York. They own Caesars Palace in Las Vegas. And they have a great balance sheet to go acquire other properties. So it just seemed like a good day to focus on, if you're going to be inside, buy some good real estate that's making you a dividend as well.
What they
and order
pay?
some Domino's pizza, apparently.
What do they pay you?
They're paying 6% dividend.
6%?
Yield. That's right.
Oh, no. That's attractive.
Yes,
Okay.
Stuart likes the 6% dividend.
Yeah,
yield.
that's my cutoff point. David, that will be you.
Yeah.
Amazon, Walmart, Target. Who did you, out of those three, who do you like best?
Well, for sure it would be Walmart. I will say that we ended up selling it about a year plus change ago just because the yield came down to be only a little over 1%. But they'd grown the dividend every year for 51 years. They're still growing it. It's just the stock was up 46% in a year, and we needed to move on for better opportunities. Walmart, when they talk about .com, Walmart's the gold standard, a brick and mortar retailer that's the only .com that competes with Amazon. So Walmart's a really wonderful business.
Okay, Darren, tell me more.
Good morning, Stuart. Keep in mind, this is the very first time JP Morgan has actually admitted in writing that the bank cut ties with President Trump and his entire business empire just weeks after the January 6th Capitol protest.
David, what's your perspective on this? Is this a big issue for JP Morgan?
I think that Jamie Dimon is probably the most qualified person in America to deal with this. He's a master at the PR side of it. I had issues that I brought before as a shareholder on some of the debanking, and they made it all right. They had some issues in 2021 that they were doing that were not right. And they not only apologized, fixed it, totally got out in front of the new policy. I have a ton of regard for Jamie Dimon. I think he's going to get this fixed. I don't think they should have closed the accounts, but I do think they had the legal right to, but that's what the lawsuit will be for. And it's just right now, you ask, is it bad for JP Morgan? They don't want this in the headlines. So they're going to have to go get this thing resolved.
David, again, thanks for sticking around for the hour. Appreciate it.